Now, there's an important distinction between these two groups of companies that we've just talked about here. The ones that are reinvesting their earnings to grow as fast as possible are referred to as growth stocks. And the companies that are simply operating in a consistent manner and then sharing a portion of their earnings with the shareholders are called income stocks. For growth stock investors, a return on investment is going to be generated through the business becoming more valuable over time, and in turn, the share price becoming more valuable too. Income investors may still see some appreciation in the underlying share price, but much of the returns generated will be from those dividend payments. You also have some companies that fall in the middle, where they are reinvesting earnings to grow the business, but they're also paying out a dividend, and these are referred to as dividend growth stocks. One common misconception out there about dividends is whether or not companies are actually required to pay them. There's actually no set requirement out there that says that a company must pay dividends to their shareholders, except for special dividend stocks such as REITs. These REITs own a portfolio of real estate, and they are required to pass along at least 90% of their taxable income to shareholders in the form of dividends. But aside from that, in a few other special circumstances, there's no set rule that says a company of a certain size must pay dividends to the shareholders. Instead, it's something that is determined by the board of directors of a company. Normally, the decision to pay a dividend or not is going to be put to a vote where shareholders are able to decide whether or not they want to have dividends paid out. But keep in mind, not all shares have voting rights. But even though paying a dividend is not required, keep in mind that if a company decided to be greedy and retained all of their earnings to pay big bonuses to the executives, for example, shareholders would bail, and that would have an effect on the share price. Since most people at the top of a company are paid at least partially in company stock, it's in their best interest to do what they can to maintain a high share price.